Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar continues its rally since breaking above the 60-day simple moving average, and from there still remains somewhat positive as the dollar index reaches a low of 104.10, a level not seen since early November. Lingering concerns about the US economy are weighing on the US dollar, with the mixed economic data on Wednesday after the ADP private payrolls fell short of expectations while the services activity and factory orders exceeded forecasts. Attention now turns to Friday's February jobs report, or the non-farm payrolls, which could influence market sentiment and expectations for the US economy. So do keep an eye on that. So with the target looking like it's on towards 64 cents, reassess from there just in case we see a little bit of profit taking, because we are getting close to the overbought region. Any pullback should find support around 63.15 in the interim. Euro climbs higher ahead of Thursday's ECB rate decision, with a 25 base point cut expected, reducing the main refinancing rate to 2.65% and the depositing facility rate to 2.5%. Despite weak EU growth, traders have lower bets on additional cuts for the rest of 2025 due to the persistent inflation concerns. So with the dollar index, which measures the greenback strength against a basket of 6 major currencies, as I mentioned, dropping to 104.10, we find now that the short-term target of 106.5 to 107 has been reached. Now time to reassess, just in case we see a bit of profit taking come back into play, as these candles are getting slightly overextended. If we do see any pullback, support is seen around 107.5 to 106.90. With the bearishness coming back into play for dollar yen, all eyes look on this key support level at 148.70. Now a break there would give further scope to the downside, and jumping to the weeklies gives me a view around 144. A big level at 148.70, so do keep an eye as the technicals are negative, and no doubt I do anticipate this break eventually happening after many attempts have failed. Sterling would all cheers when it comes to the topside target of 129. It was the measured move from the inverse head and shoulders, and from the break of the neckline now reaches its target of 129. Therefore, I'd rather sit out for the moment and reassess the next position, as no doubt the outcome of the non-farm payrolls report will be a key catalyst potentially shaping the next move for the British pound. Turning to commodities, the market was somewhat whipsaw, but nevertheless is still firm, and I still am viewing a move on towards the region of 2,950, with this year's 2025 target of $3,000 an ounce. And wrap it up with oil, my neutral view still holds, even though we have crushed the level of 66.70. In light of how the market looks, it's still a little bit uncertain, so I'd rather sit out for the moment and just assess the next move. Well, that's a wrap. Thank you for joining me, and as always, look out for the interest report. I hope you enjoy the great start to the day.